Hello and welcome to another update video on ADA. I only want to focus on the shorter time frame today. I mean, you might have watched the video yesterday in which I covered the daily chart. I would recommend you do that if you're new on this channel. In this video, I just want to share with you my latest thoughts around the smaller time frame here. 1 hour chart. It is still possible that the wave 4 triangle we've been tracking finished here. Obviously, this level must hold at around 62 cents. This is the invalidation point to keep the thesis alive that a wave E of the triangle already completed. The problem is that an E wave of a triangle, when it's complete, normally the breakout to the opposite side of the E wave is quite aggressive and impulsive. I don't see that, okay? The structure would already got quite messy on the way up, but now the pullback is too sharp to be part of an impulsive structure to the upside. So it's kind of problematic. I mean, we talked about the potential that this D wave might still be unfolding. Hold on. That this D wave is still unfolding. Absolutely possible. In this case, the market is working on some kind of a complex, let's say, corrective rally maybe here in this D wave, and it could be A, B, C. So this is still this potential extension of the triangle, that the D wave never finished. It is still unfolding. In this case, we might be moving up in maybe a diagonal pattern, wave 1, wave 2, wave 3, wave 4, wave 5. This is a possibility because in a C wave, the move up can be a diagonal pattern, The problem is rather that this is a 3-wave move up, so it's not a high confidence move. So it would be A, B, C in one. This is at least one scenario that would apply here. It's not impulsive, so it opens the door to many other scenarios. I think there are a couple of things to mention here. It can move higher, as long as we're holding above the 61.9 cent level, because that's the invalidation point of the 1-2 setup. But the wave 1 is not a 5-wave move, so it's not a high probability setup, but you have some very clearly defined parameters. Especially what we can add to the chart is also a Fibonacci support area for the wave 2. This is the only bullish case I have left from the June low, that this is a 1-2 setup. Yeah, I mean, I could say maybe it's forming just an extended ABC or so. I mean, that's always possible as well, but that's why we're tracking this support area, because as long as this is holding, the market might continue to grind higher, and then I will continue to adjust support levels along the way. But overall, not really a high confidence move. Had the market started to develop nicely impulsive 5-wave patterns to the upside, it would be more clearly bullish. So we do have some warnings in the crypto sector, because some of the potential impulses that we're forming, at least on the micro level, on the nano level, they are starting to morph into either diagonals or ABC structures. So yeah, it's not great, but this is the area to watch for reaction now. Today, 64.2 to 68.6 cents. It's just that the reaction to the upside is not convincing in terms of, oh yeah, probably the wave 4 triangle completed, so we expect an upside breakout. Well, with the latest price action, it's just become a bit more questionable. But it's technically valid as long as this last swing low from June is holding. Now, in the short term, we want to see some reactions here from the bulls. The problem is also the pullback doesn't really look like a corrective pullback as well, right? Looks quite impulsive. So for now, we've arrived here at the 50% retracement, and a break above the 73 cent level should indicate the third wave is taking us to the 80 cent plus range. That's the update on ADA. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.